Welcome to the special edition of the Nueva Vida Group podcast. We are a family-owned private client advisory business that specializes in advising the high net worth, the ultra high net worth community on acquisitions, project management and development globally. We're going to have a chat and look at the key points relevant to our clients from the budget that was released earlier in the week and summarize.
A busy few days, hasn't it? I mean, I just got back from being in London, seeing clients. I think overall people are quite calm. They seem quite proactive about it. And I'll be honest, I think it could have been a lot worse. I don't know whether that's a good thing or a bad thing, really. It's actually quite an underwhelming budget. There wasn't any sort of pro-business or growth opportunities that I could hear or see, but there wasn't major punitive tax increases that we were sort of expecting or being told to believe that they might come into place. So it's been an interesting few days, but I think overall it probably could have been a lot worse.
I think it was a little bit underwhelming. I think the leak kind of summed up the situation in this country at the moment, which you just have to laugh at pretty much. But I think there's five key areas which we just prepared for this, which I think are relevant to our high net worth community. So I'll just go through them. So the first one was that there is a significant tax rises on investment and property income. So dividend savings and rental income tax rates all increased by 2%, which ultimately reduces net yields for investors and property owners. So that's one. The mansion tax style surcharge, which I think was expected and was brought in, which is only affecting on 2 million plus homes.
With that, they haven't really defined how that's going to work. So I mean, I've listened to a couple of political podcasts today, and both of them said that the mansion tax or proposed mansion tax it will come from central government, so it won't come through local councils. So it will actually be an additional payment on top of your council tax, and it's going to start at around £2,500 per year for properties between 2 and 5 million, and then after 5 million, raising to 7,500 a year. I think that was to be expected. A populist approach,
Yeah.
but I think people were expecting it. And it sounds to me, from what I've heard, read, listened to, there are going to be ways to, sort of have delayed payments or deferred payments. So I don't think it's quite as a shock as people sort of anticipated.
And then in third, which is a relevant one, is income tax
Yeah,
thresholds have been frozen
yeah,
beyond
that's a bit of a
2028, which is
that's what they describe as a stealth tax, and it's also sort of breaking the manifesto or the Labour manifesto. So what that effectively means is that as salaries and people's pay increases, they'll effectively be dragged into higher tax thresholds. It's actually a significant tax increase by 2030. So I think that's the sort of sneakiest or sort of stealthiest one of the lot, and probably the most notable. And that will have an effect, a big impact on the middle earners. And naturally, that'll have an effect on the real estate market, people's buying power longer term.
And then the fourth is pension tax efficiencies has been reduced. So salary sacrifice pension contributions above the threshold has now
I
become
think
taxable.
with that
So
one, where that's really
there's
relevant
that.
is especially to retirees or people thinking about retiring and expecting to have a bigger pot. So it will affect working people paying into a pension, and retirees in the past have always sort of, there's always been quite a large number that have wanted to relocate or move to a warmer country when they retire. Effectively, because of this, their pot or their monthly amount that they'll get from their pension will be reduced significantly. And my understanding is in the tens of thousands, not it's not a small amount.
And then fifth, in the fifth one we have is growing pressure on broader wealth preservation strategies. So tightening around ISAs, capital gains tax reliefs, gifting, inheritance rules, which is kind of almost a bit of a less favourable environment for
Yeah, well,
long-term
that on
UK
this
wealth
particular
planning, I
one,
think.
in our sort of pre-budget podcast that we released on Monday, we spoke at length about the long-term effect of Labour's sort of view
Yeah.
on tax and the current government. And I think these sort of tightening and changes that they didn't elaborate in much detail actually when they announce them. But if you look at the detail, these are the things that are sort of going to affect the high net worth community.
So, in summary, Jack, what
In
does
the
this
UK, I
mean for the
think
high net worth and the ultra high net worth
ultimately
community?
there's not a lot of change. I think things are going to sort of stay on the track and on the course that they already have. We know sort of people in the UK, and we know this from our own business day to day, that people are adapting and they are sort of open to change. People do want to stay in the UK. I think it will go twofold, if I'm honest. I think that it'll either confirm people's view that actually it's time for me to relocate. The UK no longer offers me the lifestyle I want, and now I'm being asked to pay and contribute more tax towards it, or it'll go the other way for others and it'll give them more confidence, more certainty. They'll be able to make more decisions. So I think the knock-on effect, to our clients and to the sort of British consumer in general will be those sort of two things. I don't see, if I'm really honest, I think it could have been a lot worse. I don't think that there'll be any slowing down of the turmoil coming from Labour government. I think it's going to continue to be quite chaotic. But now that everyone knows what the budget set out to be, things will sort of settle down a little bit and make life easier to make the decisions they want to make. So yeah, overall, it could have been a hell of a lot worse. I think we're kind of relieved. I feel a bit calmer, a bit more relieved now, if I'm honest.
Yeah. I've just to add, I think it's almost kind of bought more time for them to figure out. That's kind of the impression I got. It's kind of they didn't really do anything significant. A lot of stuff was expected, and some people have said that that's more just buying more
I think
time
you're right. I think you're
to
absolutely right.
figure it
One
out.
thing is
I think with
noticeable
the
is that
next
the
Republic.
markets, they didn't sort of, there was a little bounce in the pound, but there was, the markets didn't react badly, and that's a good thing. They didn't react badly. It wasn't, there was some sort of charts knocking around that, if they proposed certain things in the budget, we could sort of see a Liz Truss 2.0 type shock, but there was no shock in the market, and that is a good thing. That shows there is some much longer term confidence. But no, I think you're right. I would not be surprised if they come back next year, you know, asking for more. They've broken manifesto pledges before. They clearly have not got a growth or business mindset, and I think they probably will come back for more, in my opinion.
All right, well, that's just a quick overview of the budget, which happened yesterday. If we can help or offer any bespoke advice, please feel free to just drop us a message or send us an email at info@nuevavidagroup.com. We look forward to seeing you on the next one. Such a really exciting one. We won't give too much away, but you could say it's all about the number one destination at the moment. So that could be, I think that's well worth a listen. I'm looking forward to it as well. So yeah, we'll put our contact details in here below and get in touch if we can help. Thanks.